Assalamualaikum and good morning. Thank you for joining us today. I really love the incredible energy in the opening. It represents the way we feel about UiTM. UiTM has always been a place for people with big ambitions and big dreams. A place where people are fueled with optimism to make things better. To make things that can change the surroundings. The things that can change the world. It is such an important part of who we are at UiTM, and it inspires us in everything we create and do here. We are proud to call UiTM Machang as Mchsas. It is our home. We have a lot to talk about today. Let's get started with some introduction of our group members. My name is Wan Muhammad Shakir bin Wan Muhammad Nasir, and our group we have Nur Afiqah Mahfuzah binti Muhammad Zamri, Nur Aimuni binti Abdul Rashid, and Shabia Fona anak perempuan Bahbeder. And we are just getting started. So let's go. We're thrilled to share the latest issues announcement, and to tell you all about it, here's Shabia.
Thank you, Shakir. So now I will let you know about the new Mfrs, Mpers and Mpas in detail. For your information, the accounting standard in Malaysia are issued by Malaysian Accounting Standard Board, MASB. It is established under the Financial Reporting Act 1997 as an independent authority to develop and issue accounting and financial reporting standard in Malaysia. So currently there are 3 accounting standards applicable in Malaysia, and they are Malaysian Private Entities Reporting Standard (Mpers), Malaysian Financial Reporting Standard (Mfrs), and Malaysian Public Sector Accounting Standard (Mpsas). These accounting standards may have different scopes and users, but have the same objective. Without wasting time, I will explain more detail and one by one the 3 accounting standards. Malaysian Private Entities Reporting Standard (Mpers) is the new financial reporting framework for private entities issued by MASB. It replaced the current Private Entities Reporting Standard. Mpers is a self-contained standard with 35 sections covering all relevant areas for financial reporting by private entities. The talk of who should apply Mpers always been the main talk of the town. Basically, the Mpers is developed for private entities. The private entities is referred to private company incorporated under the Company Act 1965 that is not itself and is not a subsidiary or associate or jointly controlled by an entity which is required to prepare or lodge any financial statement under any law administered by the Securities Commission or Bank Negara, Malaysia. Private entities could also opt to adopt the Mfrs framework. All private entities which adopt either the Mpers framework or the Mfrs framework must adopt the framework in its entirety. The requirement and guidance in Mpers would generally be sufficient for small and medium-sized private entities. The Mpers is effective for financial statement with annual periods beginning on or after 1st January 2016, but early application is permitted. The adoption of Mpers is partially in response to the recommendation by the Bank Negara Report on the Observance of Standard and Codes (ROSC) Malaysia. I will continue with the next accounting standard, which is Malaysian Financial Reporting Standard (Mfrs). Mfrs is an accounting standard applicable to non-private entities. It is equivalent to IFRS for issued by the IASB. This new standard is the replacement of FRS framework. There are 42 standards covering all relevant areas for financial reporting by non-private entities. Who should apply MFRS? Non-private entities, except for transitioning, shall apply the MFRS framework for annual periods beginning on or after 1st January 2012. MFRS framework which come into effect from 1st January 2012. MFRS are designed to apply to the general purpose financial statement and other financial reporting of entities under the purview of Section 26D of the FRA that does not meet the criteria of private entities. Meanwhile, the Malaysian Public Sector Accounting Standard Mpsas is the financial reporting framework issued by the Accountant General Department of Malaysia. These accounting standards are applicable to public sector entities other than government business enterprises, GBE. GBE are entities with the 5 following characteristics. First, an entity with the power to contract in its own name. Second, has been assigned the financial and operational authority to carry on a business. Third, sells goods and services in the normal course of its businesses to other entities at a profit or full cost recovery. Fourth, is not reliant on continuing government funding to be a going concern. And the last one is controlled by a public sector entities. Mpsas is drawn primarily from the International Public Sector Accounting Standard IPSAS issued by the International Public Sector Accounting Standard Board IPSASB. There are 35 Mpsas standards issued by the AGD. Federal Authority Bodies FSB determined that its date of adoption of Mpsas is 1st January 2018. The AGD believed that the adoption of Mpsas will lead to a significant improvement in the quality of general-purpose financial reporting by public sector entities. Hence, the AGD strongly encourages the adoption of Mpsas by all public sector entities towards enhancing the quality and transparency of public sector financial reporting. To sum up the introduction of the 3 accounting standards, we can see that MFRS and Mpers were developed based on the same framework. The principle were derived from IASB framework for the preparation and presentation of financial statements, except that the Mpers is a simplified version of MFRS. Mpers attempts to meet the user's needs while balancing the costs and benefits to preparers. I guess that's all for the introduction of Mpers, MFRS, and Mpsas. So I will hand over to Shakir.
We are excited that we have the giant update regarding the standards. And now let's talk about the history and background of MFRS, Mpers, Mpers, and Mpsas, which is Mpsas. On 1st January 2005, in aligning to show Malaysia's commitment with global accounting standard, the MASB accounting standard was renamed Financial Reporting Standard FRS. In this standard, on 1st January 2006, companies are only required to implement all FRS in their financial statement. This was the first step taken by MASB to demonstrate their commitment to IFRS, which is International Financial Reporting System Standard Convergence. Since 2006, MASB has standardized the FRS standard to make them similar to IFRS, and FRS also was renumbered to match the IFRS numbering exactly. MASB indicated that in 2008, it will achieve full convergence in IFRS by 1st January 2012. In November 2011, in accordance with full convergence, the MASB established a new accounting framework, the Mfrs, which is fully compliant with IFRS framework. As a result, as of 1st January 2012, Malaysia had 3 sets of MASB approved accounting framework: the Mfrs framework and FAR661 framework. All the entity other than the private entities must use Mfrs framework as of 1st January 2020. Entities that have alternatively chosen to apply FRS must comply with Mfrs for an annual period beginning on or after 1st January 2018. This is according to MASB notice titled Enrollment to the effective date and applicability of the FRS, which was issued on 28 October 2015. The Mfrs framework can be used as soon as possible. The FRS shall be withdrawn for complicate application for financial statement with annual period beginning on or after 1st January 2018. In comparison to other nations, Malaysia transition to IFRS is comparatively simple because IAS has been included in the Malaysian accounting standard since 1978. As a result, switching to the IFRS framework had only a minor budgetary impact. Next, let's talk about Mpers, Mpers, which is Malaysia Private Entity Reporting Standard. Malaysia Accounting Standard Board (MASB) issued Private Entities Reporting Standard first in Malaysia for private entity, as defined in the Companies Act 1965. First, focus on property need rather than investor need. The framework generally prescribed the use of the cost model as a measurement basis for private entities. PERS first was effective from 1st July 2007 until replaced by Mpers in February 2014. The MASB issues Malaysia Private Entities Reporting Standard Mpers, and this sets a new milestone for financial reporting of private entity in Malaysia. Mpers is based substantially on the International Financial Reporting Standard IFRS for small and medium-sized entity, IFRS for SME, issued by IASB in July 2009. In October 2015, the MASB issued amendment to Mpers, which are equivalent to some minor changes to the standard in Mpers, providing more clarification or guidance on the requirement and align some standards to those of Mfrs. On 27 October 2015, the launch of Private Reporting Standard Mpers Mpers was officiated by Tan Sri Azlan Zainul, Chairman of Financial Reporting Foundation (FRF) at Menara SSM Kuala Lumpur. There also represent was Datuk Zahra Abdul Wahab Fener, the CEO of Suruhanjaya Syarikat Malaysia. On the behalf of Tan Sri Azlan Zainul and Datuk Zahra Abdul Wahab Fener, they said the private entities of SME are extremely important to Malaysia economic transformation process as the business entities advance to a new financial reporting framework that is based on the International Financial Reporting Standard IFRS for SME. And this is an important step towards preparing the private entities for the SME for globalization. The SME will be able to create a new opportunities that could also be facing enormous challenges through globalization. It is therefore important and relevant that the SME in Malaysia adopt a global financial reporting language that is not applied up to date but also have been adopted by other 73 countries around the world. The new reporting framework known as Mpers framework is effective for financial statement beginning on or after 1st January 2016. With early application permits, private entities now have a choice to continuing with the existing private entities reporting standard PERS framework or apply Malaysian Financial Reporting Standard and FAR661 framework, which mandatory for non-private entities except transitioning entities for 1st January 2016. Mandatory migration to the new Mpers framework as the requirement for the first time. Adoption of Mpers is retrospective. It is important that the private entity prepare in advance if they have to migrate to Mpers framework or an FRS framework in the near future. A common question that private entities all will ask is how far and how different is the current framework with the Mpers framework. Then the amendments are effective for first statement beginning on or after 1st January 2017 with early application permits. In March 2013, the Ministry of Finance issued a circular to announce the implementation of equal accounting for all the public sectors entities from 2015 and the issuance of Malaysia Public Sector Accounting Standard Mpsas. This is in accordance with the public sector transformation policy outlined in the economic model, in line with the aspiration and strategies outlined in the Malaysia Plan, which is from 2011 until 2015 chapter on transforming government to transform Malaysia. Through the initiative, the government has targeted to achieve a federal government deficit budget of around 3% by 2015 and neutral budget by 2020. By 2016, concerning about the reporting, FSB are required to prepare financial statement in compliance with Section 16 Subsection 1 of Financial Procedure Act 1957 Subsection Act 61 and comply with the approved accounting standard, which is Mpsas. Mpsas is the accounting standard that has to be observed by the public sector accounting entities in Malaysia. It is expected to be applied to FSB in the preparation of the financial statements and was encouraged by AGM to follow, which will the effect from January 2017. However, early adoption is recommended to SGD develops and publish Mpsas which apply to the accrual basis of accounting and sets are requirement dealing with the transaction and other relevant events in general purpose financial reports. By the end of 2017, it is stated that all the public sector will apply accrual accounting using Mpsas with effect from 1st January 2018. Mpsas is based on the International Public Sector and Accounting Standard, which is IPSAS, published by International Federation of Accounting (IFAC). Currently, there are 36 Mpsas that will issue by AGD with the newly updated Mpsas 40. Now, we are just getting something from this topic, right? With the even justification and background of these new changes, it is eventually comes with challenges and the benefits of it. Next, let's talk about the challenges and advantages or opportunities of these standards. To tell you more about it, next, here is Aimuni.
There are some challenges and advantages of these three standards. For MFRS challenges, Firstly, the relative implementation cost will be even larger for smaller companies, as there are fewer potential users of the financial information disclosed by small firms. This would result in fewer potential benefits and higher accounting costs per users. The notion of applying IFRS across the board to all companies irrespective of their size in terms of market capitalization and turnover might appear to be the right solution for investors, but could also be difficult to implement and enforce, especially in the case of smaller non-listed companies. Secondly, the complex nature of the sum of the IFRS. Larson and Strait reported, based on data collected by the largest international accounting firms during their 2002 convergence survey, one of the most significant impediments to convergence appears to be the complicated nature of particular IFRS. In another study, Zermakovich, who examined the adoption of IFRS by BEL 20 companies in Belgium, found that 75% of the respondents agree some of the IFRS are difficult. Among the standards that are complex in nature and standards related to H accounting IAS 39 and impairment test IAS 36. Now, the advantages of implementing MFRS. Firstly is globalization. IFRS provides a means for countries to scale globally. Hence, local companies can now easily look into the public financial statements of foreign companies and benchmark their standing and performance. At the same time, foreign countries also can look into our local businesses when they plan to invest in a business in Malaysia. Moreover, this convergence of accounting standards allows accountants from one country to work in another country. Before, the accountant has to learn a different set of accounting rules when moving to another country. Today, any accountant can move and aspire to grow to different countries implementing the IFRS. The second advantage is more opportunities for accounting talents. The change to IFRS is a total improvement to the whole accounting process. With the IFRS, disputes with the old standard are resolved. Further, it is also the overall development of the accountancy profession because now Malaysian accountants are knowledgeable and skilled with the global standards. Implementing IFRS in Malaysia has increased the demand for Malaysia's accounting talents. Multinational companies are demanding more accounting talents from Malaysia who are knowledgeable and skilled in using the IFRS. Moreover, the adoption of the IFRS has opened doors for accountants to go and work anywhere in the world. Now, let's look at the Mpers challenges. Firstly, accountant for SMEs. There must be a supply of the accountant that has a sound knowledge on the IFRS and Mpers. Employing a full-time preparer in the long run will benefit the company as the knowledge and the unique features of this company will be nurtured in the hands of the internal staff and prevent the secrecy and safety of the company's lost to external people if they hire a part-time accountant. Outsourcing the work of preparing the financial statements is costly in the long run and at the same time possibly risk companies to lose its confidential information to its competitors. In the first few years of this implementation, there will possibly be a scarce supply of SMEs accountants to cater to the demand of the task in the market. Capacity and capability building in the human capital and resources may become a problem for the small entities. Secondly, education to the owners of companies and universities. The other challenge is the additional task for the universities and learning institutions to introduce another accounting-related paper. This gives more burden to the students as they need to understand and differentiate the accounting standard applied to the SMEs and the public companies. For the learning institutions that conduct entrepreneurship programs as part of their certification, Mpers shall be introduced as part of the subject so that the graduates' produce will not be left behind in the market. Again, it makes it harder for the students, especially those without any business and accounting background, to get closer with the knowledge. The advantages for Mpers. Firstly, uniformity. The common sets of the accounting standard for SMEs such as Mpers will ultimately benefit the users of the financial statement as they can easily compare one company with another company. Moreover, the SMEs can compare their positions and statements with their peers and competitors, the performance of the industry as a whole, as well as conduct trend and forecast analysis more accurately. The users such as prospective investors, suppliers, customers, lenders, and financial institutions can easily perform analysis and decision making on their own analysis objectives. It is also less hectic when making judgments as the elements of subjectivity, diversities, and too many options on recognition, measurements, and disclosures have been removed. Second advantage is reputation and confidence. The other benefit of the Mpers is it will boost the confidence in SMEs as the financial statements have been prepared based on a high quality of standard prepared by IASB, a well-credible board which is respected by the whole communities. The reliability of the financial statement is enhanced while the reputation will increase as it complies with the internationally accepted accounting standard. Furthermore, if this financial statement is audited by the third party, like public accountant firms, it will boost the truthfulness of the accounting figures and information. Hence, reliable and truthful financial statements protect the interest and increase the confidence of its readers. Alright, now let's look at the last standard, Mpsas, the challenges. Despite its usefulness, implementing accurate accounting in the public sector is very challenging. Based on studies by Harun and Robinson in Indonesia, Tikal in Fiji and PwC in Malaysia, among the challenges and barriers in adopting accurate accounting are legal issues, lack of political support, inadequately skilled human resources, high labor turnover, insufficient investment in capital equipment, and incompatible information technology systems. Compared to the previous experiences from other countries, the period given by the Malaysian government is shorter, which means there is a limited time for the public sector to be fully prepared to implement accrual-based accounting. Within this short period of time, the government has faced many challenges. In Malaysia, Mpsas has been designed to follow the international accounting standards and also to suit the national circumstances. However, there are some standards that are not listed by the International Financial Reporting Standards (IFRS) that have been formulated to accommodate the needs to public sector. The advantages of Mpsas. Firstly, greater accountability and transparency. There is compelling evidence that IPSAS provide greater clarity on the financial position of public sector entities across the world. IPSAS are important in promoting transparency and thereby curbing fraud and corruption. Financial statements prepared in accordance with IPSAS capture what a government receives and allocates, as well as what it owns and owes. Secondly, better decision making. Knowing both the financial statement of an entity and the financial implications of a proposed policy measures helps decision makers to make better financial judgments about an entity and its activities. Public bodies and other stakeholders are assisted in planning for the future. And the last advantage of Mpsas is professionalization and access to talent. The adoption of IPSAS plays a significant part in increasing professionalization of the finance function and accounting across the public sector. It presents significant opportunities to increase the influence of the finance organization while capitalizing on the skills of younger entrants into profession within the sector, ensuring that the public sector becomes a desirable career destination of choice for professional accountants. That's the point for this part. Now over to you back, Shaki.
That's it. The challenges and advantages we can gain from adopting these standards. Now we cannot wait to hear the suggestions to help solving the issues, and we are not done yet. To tell you more about how to solve the problem and issues, here's Mahfuza.
Okay, thank you, Shakir, for giving me opportunity to present. And let me present on how to solve the issue of new MFRS, Mpers, and Mpsas. Let's we start with new adoption of MFRS. For more detail, I will describe it in Mpers. However, MFRS 1 requires an entity first MFRS financial statement must have three statements of financial position, including one as at the date of transition to MFRS. MFRS 1 first time adoption of Malaysian financial reporting standard requires, among other things, that an entity first MFRS financial statement must contain at least three statements of financial position, two statements of profit or loss, and another comprehensive income, two statements of cash flow, and two statements of changes in equity, reconciliation of equity and total comprehensive income recorded under the previous GAAP to their respective value restarted in accordance with the MFRS must also be provided by first-time adoption of the MFRS. Fortunately, non-compliance were few and the majority of listed companies showed complete compliance of FAR661 transitional criteria. Next, I will present about new adoption of Mpers. Mpers is similar to MFRS. Mpers contain requirement for the first adoption of new reporting framework. A first-time adopter is required to determine the date it will transition to Mpers, which is the opening of the comparable period, and to provide an opening statement of financial position for the date as the point at which the transition will begin. As the opening statement of financial situation must be Mpers compliant at the transition point, thus all applicable Mpers required must be applied retroactively at the transition date. This may require modifying first accounting standard at the time of transition. The ensuing adjustment due to the changes in accounting standard are directly recorded in retained earnings. For example, if a private entity has ensured quarters equity investment under Mpers using the level of cost and market basis, it must change the measurement of fair value at the date of transition and adjust the difference between fair value and the prior carrying amount to the opening retained profit at the date. Similarly, if a private entity used the revaluation model for its PPE under Mpers, it may treat the carrying amount at the date of transition as assumed cost under Mpers, and the associated revaluation reserve is moved to retained profit. However, the standard provides a few requirements and optional exclusions and exemptions from the retroactive implementation of Mpers criteria. When making the transition to Mpers, an organization is required to reconcile the implication of the transfer on equity and comprehensive income. Based on modification to MFRS 1, first-time adoption of MFRS, the updated Mpers included a choice to allow Section 35 to be utilized more than once. The organization must either apply Section 35 or apply Mpers reactively, as if it has never stopped applying Mpers. If it's applied Mpers in a previous reporting period, but it must resend previous annual financial statement did not include an express and unreasonable statement of comply with Mpers. The amendments include the requirement the government's loans that were measured at interest rate below market at the time of transition not be remeasured to fair value. The amendments also include guidance for entities emerging from self-hyperinflation that are applying Mpers for the first time, as well as additional non-mandatory exemptions such as the use of an event-driven fair value measurement as demand cost, the use of the prior gap carrying amount of PPE and intangibles asset used in operational subjects to rate revaluation, and more. These modifications are in line with the most recent modification to MFRS 1. Let's take a look at the first Mpsas financial statement as well as the date of adoption of Mpsas must be determined by FSB. As examples, consider the following. The Mpsas will be implemented by FSB on 1st January 2021. Its first Mpsas financial statement will be due on 31st December 2021 if the exemption for first-time adopter, the impaired fair presentations, and complements with Mpsas are not used. However, if it does, it generates its first transitional Mpsas financial statement on 31st December 2021 and continue to do so until the exemptions have reached their limit, that is, when the third-year transitional relief period expires, or until it complies with all Mpsas standards. This information is from an article. I will proceed with new adoption of Mpsas. The Mpers accounting standard, which can be adopted by FSB, was announced by the Malaysian Accounting Standard Board by removing a number of less helpful disclosure criteria. First, give FSB the opportunity to disclose their yearly financial statement without complying to complex international accounting standards. Accounting could play a crucial role in ensuring the development of Malaysia, which is aiming to become a developed nation by the year 2020. MSB published a new financial reporting framework for private enterprise on 14 January 2014. The Mpers, which will replace the present PERS, must be used for financial statements starting on the after 1 January 2006 and application is required. However, according to AGM perspective, FSB are less likely to adopt Mpers. As a result, the AGM advised FSB to adopt Mpsas for each general purpose financial report. For those that are implementing the new standard for the first time, the transitions from the existing accounting practice and procedure to the new requirement is their main issue. The transitional provisions will control the amount of time allowed to implement accrual according in line with Mpsas after the decision was made to do so. To improve the quality and transparency of financial reporting, the AGM strongly urges all FSB to implement Mpsas. In order to improve accountability and transparency in its financial management, the FSB already used complete accrual basis accounting under Mpers. This allowed the FSB to report its financial performance, financial condition, and cash flow in more specific manners. Although it may not seem that FSB would transitions to Mpsas more easily than another government organization that have been used cash accounting, this assumption is incorrect. Because Mpsas is a hybrid accounting system, it takes into account that non-profit status of governmental organization. As As a result, it has a rule for revenue or recognition and profit or loss that are significantly different from Mpers. The accumulated fund and surplus or the deficits from the previous government accounting system are still used by Mpsas. It seems that FSB have a significant obligation to deliver to the stakeholder in terms of reporting. This is necessary to make sure FSB can find a balance between carrying out their independent roles and upholding public accountability. That's all for me. Now, back to Shakir.
Thank you, Mahfuza, and thank you all today's presenters. What a spectacular announcement, right? So to be concluded that Mpers, Mfrs, and Mpsas are really good for our economic system in Malaysia. For accounting standard, a good accounting standard that can give benefits to our country. So what else could the government do for our best in this country? Malaysia is great. Malaysia boleh. Hidup Malaysia. So that's all from our group. Thank you for your time and we'll see you again in the future. Assalamualaikum.